Ever feel like you're playing a game where someone else knows all the rules? A game where the odds seem stacked against you from the very beginning? Welcome to crypto trading, a world of digital assets, decentralized finance, and unprecedented opportunity. Beneath the price charts, a hidden war rages, a silent conflict that shapes the market's every move, not with armies or physical weapons, but with capital streams of real-time data and meticulously crafted strategy. Every decision, every trade is a calculated move. It's a high-stakes battle, a constant push and pull between crypto whales, the large institutional investors, and the everyday retail investors. Every trade you make, whether big or small, is part of this digital conflict, adding to the overall market dynamic, whether you realize the implications or not. The blockchain is a transparent battlefield, an open ledger where every transaction is recorded. Every move is visible, traceable, if you know where to look and how to interpret the data. Whales use their substantial resources to strategically manipulate markets, influencing price movements with large buy or sell orders. While retail investors, often coordinating through social media, move as a swarm, sometimes with surprising collective force. This constant on-chain struggle, this tug-of-war between giants and swarms, drives the dramatic price swings we see every day. For whales with their massive holdings, it's primarily about protecting fortunes, preserving their wealth in a volatile landscape. For retail investors, often with limited capital, it's about chasing financial freedom, hoping to achieve significant gains. The market, in its constant flux, reflects this underlying tension, this battle for dominance. Fear and greed, the two most powerful human emotions, play out in real time, influencing trading decisions and market behavior. Your goal as a retail investor isn't to directly beat the whales at their own game, an almost impossible task, but to understand their moves, anticipate their strategies, and navigate the turbulent waters they stir with their massive trades. Knowledge is your most valuable asset, your shield and compass in this volatile and often unpredictable world. Let's dive deeper into this fascinating arena and meet the key combatants, understanding their motivations and strategies. So who exactly are these whales we keep hearing about? What defines them, and what makes them so influential in the crypto space? They're individuals or entities, ranging from private investors to established firms, holding enough crypto to move the market, sometimes with a single well-timed transaction. Their holdings are substantial, to say the least. Think early adopters, those who got in on the ground floor, investment funds managing vast portfolios, or even the exchanges themselves, financial titans of the digital ocean wielding considerable power. Their every move is scrutinized by eager onlookers, as even a single transaction, whether a buy or sell order, can create massive waves of volatility. Whales can crash prices dramatically by selling large amounts of their holdings or create widespread fear and uncertainty with massive sell walls, signaling a potential downturn. They're often seen as masters of psychological warfare, using sophisticated tactics like spoofing, placing fake orders to manipulate market sentiment and trick other traders. A huge buy order from a whale can spark optimism and trigger a bull run, only for the whale to cancel the order and then sell into the resulting rally, profiting from the artificial price increase. But their significant size also makes them prime targets. Blockchain transparency means everyone, including regulators and other market participants, can track their wallet activity. Dedicated whale watchers constantly monitor every big move they make, and even a seemingly small misstep or poorly executed trade can quickly backfire, leading to substantial losses. Therefore, whales must tread carefully and strategically. Their actions are inherently public, hard to conceal, and easily subject to misinterpretation and speculation. The entire market watches with bated breath, waiting for the next ripple, the next significant move that could shift the tides. In this high-stakes game of crypto, immense power and inherent vulnerability go hand in hand, creating a delicate balance. Therefore, understanding the motivations and potential impact of whales is absolutely key to understanding the overall dynamics of the cryptocurrency market. Now, with a clearer picture of the whales, let's shift our focus and look at the other side of the coin, the retail investors and the broader market participants. Now let's talk about retail investors, the everyday people, hobbyists, and speculators. Individually, our trades are tiny, but together, we can move markets. Social media has become our coordination hub. Think GameStop or meme coin rallies. When retail acts in unison, it can challenge even the biggest whales. Coins like Dogecoin exploded in value thanks to collective hype and buying. This crowd power is unpredictable and hard for whales to control. But it's a double-edged sword. Retail is often driven by emotion, making us vulnerable to manipulation. FOMO and panic selling play right into whales' hands. Whales exploit these emotional swings, turning the crowd's power against itself. The retail crowd is both the market's wild card and its greatest weakness. Let's see how both sides play the game. The on-chain chess match is all about strategy. Whales hide their moves by splitting large transactions or using OTC desks for private trades. Retail investors use on-chain analysis tools to track whale activity and anticipate market moves. Whales manipulate prices with derivatives, while retail bands together in liquidity pools or yield farming. Both sides use every tool available, turning the blockchain into a battlefield where information is power. The game is always evolving. Adaptation is key. Let's explore what happens when these forces align. The biggest market moves happen when whales and retail align, not when they fight. Whales need liquidity and excitement. Retail provides both. Sometimes whales quietly accumulate, then spark hype to drive prices up. News influencers and social media often follow whale accumulation. Not by accident. When retail joins in, momentum builds and everyone wins, at least for a while. The smartest players look for these moments of alignment, not just conflict. Savvy retail investors spot whale accumulation as a signal, not a threat. They ride the wave instead of fighting it. This ecosystem thrives on collaboration as much as competition. Understanding this dynamic can turn the market from a battlefield into an opportunity. The key is knowing when to swim with the current. Now, how do you navigate these waters? So, what does this mean for you, the everyday investor navigating this complex world? It means it's time to shift your perspective. Stop thinking of yourself as a passive victim, tossed around by the waves of market volatility. You're a navigator, capable of steering your own ship. Your map is the blockchain, a transparent ledger of all transactions, and your compass is on-chain analysis, providing insights into market behavior. Don't fight the currents, those powerful forces driving market movements. Learn to read them, understand their patterns, and anticipate their shifts. Zoom out. Take a broader view of the market landscape. Ignore minute-to-minute noise, the fleeting fluctuations that can trigger emotional reactions, and focus on long-term trends, the underlying forces shaping the market's trajectory. Watch for whale accumulation, large entities accumulating significant positions, or distribution, when those same entities begin to sell off their holdings. And use this knowledge to avoid emotional decisions, those impulsive reactions that can lead to costly mistakes. Manage risk. Protect your capital from unforeseen events. Diversify your portfolio, use dollar-cost averaging to smooth out volatility, and never go all in. Always maintain a reserve for future opportunities. Stay methodical and stick to your plan, even when faced with unexpected challenges. No matter how choppy the waters get, maintain your composure and stay the course. The crypto market is transparent, offering a wealth of information to those who seek it. Use the data to your advantage, turning raw information into actionable insights. Start by following on-chain analysts, learning from their expertise and experience. Learning to use block explorers, tools that allow you to delve into the intricacies of the blockchain. And observing before you invest, taking the time to understand the dynamics at play. Your journey is a marathon, not a sprint, requiring patience, perseverance, and a long-term perspective. By understanding the on-chain battle, you're already ahead, equipped with the knowledge to make informed decisions. Now take the helm and chart your own course, navigating the crypto seas with confidence and skill. The crypto seas await, full of both opportunity and risk. Navigate wisely and may your journey be prosperous.